stocks heading lower Tuesday morning. Again, there's concern about what's going on in Europe as well as possibilities of a rate hike in China. We're joined now by Charles Nenner of the Charles Nenner Research Institute. And Charles, yesterday you wrote, there are many reasons for the market to sell off, but yet you don't really think there's going to be big downside ahead for U.S. stocks right here. Is that a fair reading?
Yeah, I have a technical model that is based on 200 indicators. That usually changes before there's a big move in the market. All over through the 2010, with all the correction, has continued to be on a buy signal. And it's not so weak. Right was the last couple of weeks. The upside potential is not very big anymore on the markets before it makes a major high. I said that the cycles are down, and it's interesting, they're bottoming in 1 or 2 days. And we wrote that as long as the S&P doesn't close below 11, this is just a very small correction, and we're going to test the highs again. I think the upside is limited, and maybe go sideways for a while, but I think we're forming an important high. But it could take a couple of months until the high is in.
Right, so when you say we're testing the highs, you're talking about the early November highs or the all-time highs?
No, I'm talking about, as you may be know, we sold most of our positions out the end of April, and went a little bit into to emerging markets. But we don't have much position anymore. No, I mean, maybe go back to 1230 or so. That was our upside target for a long time. Maybe we test it one more time on lower momentum. But I think we're forming a top. One exception is, for a long time, we like the semiconductor stocks, and we continue to like them. So whoever wants still to be invested, they can find a safe place in the semiconductor stocks.
And how about looking out a couple of years? Do you still think we're headed for Dow 5 crash?
Right. I think we're going to test the lows of 2000. Was it? I think 2008 or 2009. We're going to take it out by a couple of thousand points. By the way, this 5,000 became fascinating. What happened was Mr. Prechter wrote in New York half a year ago that his downside target is 1,000, and then I was contacted by different media what I thought, and then I calculated, but I said I don't think it's 1,000, I think it's 5,000. So my target is 5,000, but it could take another 3 years to get there.
What do you think happens fundamentally that takes us there? Obviously, if the Dow's going to go to 5,000, the U.S. economy and the world economy really have to go to hell in a handbasket. There has to be no money. Everyone has to give up on the stock market. Is that what you think happens?
Well, a couple of things brewing. First of all, I show my clients the Baltic index because that's a good indicator for the economy. And I said, we're going to be fooled. We're going to have a couple of months of strong, and makes people feel at ease the measures they have to. The problem still is deflation. I show all the time what's going on the deflation front. The CPI is going lower and lower. I don't hear anybody being alarmed about the deflation. So I think we're going to have a deflationary crisis. And as you know, maybe remember in previous discussions we have these cycles that I would do on War and Peace, and it says by the end of 2012, 2013, a big military conflict. So those things together can really bring the market down.
Right, and obviously we have some tensions on the Korean Peninsula right now, and maybe part of it, but you talk about deflation here in China.
I don't think the core inflation like in China is very serious. If you really do your work, there's not too much in the pipeline. And I think inflation is a long way away. What people print money, then create inflation. That's not correct. You only create inflation if you have a wage spiral. And for the moment, there's no wage spiral anywhere, not even in China, although people demand higher pay. But for now, it's pretty quiet on the wage front.
Actually, you're saying that QE2 is going to fail?
Well, as you know, I'm a person who builds models and predicts markets, and can only do that in whatever interventions there are. Don't make any difference. So if you ask me, like I always have to say, it doesn't make any difference what they're doing. The economy is going forward for the last 200 years, and you cannot by putting more money or less money in just change it. By the way, you see the start really going up after they announced the Fed what they're going to do. So most markets don't think it has a lot of influence.
So if you can't hide in stocks because you're going to get obliterated, where do you hide over this period out of?
Well, it's interesting. If you want to know that, you should read a book about deflation. There are not too many books written about it because deflation is a long time away. And what you will see is there's nowhere to hide. It's a big problem. What we did is we bought a lot of on 4% and we sold them a couple of weeks ago. And we think we can get 4% again. And I think that's, again, where you want to be, just to stay in the 10-year bond and to realize that in the deflationary period, it's not how to make money, it's just how not to lose money.
Right. So with you in that kind of environment?
Although longer term, my goal target is 1,000, but in the meantime, you can lose a lot of money if you just continue to hold long gold.
All right, Charles.
Great.
Thanks very much.
Thanks, Charles.